Hi guys, hope you're well. Samuel Ajala again, and welcome once more to Finance for Founders. And you're welcome to another episode of our podcast. Today I'm excited. We have a fantastic guest today who will be speaking to us all about R&D taxes. All of us that are into tech startup will probably know exactly what R&D tax is. Some of us would have known there were some changes around this year as well. And we have our guest today who is going to tell us all about those changes and even more when it comes to R&D tax. And if you've not been claiming your R&D tax, please listen to this podcast. This podcast is just for you because if you're not claiming it, you're missing out on it. Right. And so my guest is called Artie Varia. And I'm going to introduce her, invite her to the podcast. Artie, how are you? Welcome
Um,
to our podcast.
Thank you. Thank you. Thanks, Samuel. I'm excited to be here.
Fantastic. And do you want to tell us a little bit about yourself for the audience, just for the audience to get acquainted with yourself?
Yeah, no, I am, I'm a qualified accountant. I've been qualified for, I'm not going to sort of say, over 20 years, but that's going to tell my age. Um, But yeah, so I've sort of spent all my working life working with the Big Four. I started off with, external audit initially, and then later specialized in R&D tax incentives. So R&D tax incentives is really all I've been doing for the past 17 years. Um, and I just love it. It's amazing to see what the UK companies are up to. Talking to all the clever people within the country, the tech specialists, the manufacturing specialists, and it's just amazing. It's an amazing place to be in.
Fantastic. What made you to transition from audit to R&D tax? What was appealing for it at the time?
I think after a few years in audit, I almost got fed up. I was working with some of the largest organizations in the country, including with the NHS and the local councils. And after some point, you feel like you're making the same recommendations. The companies are slow to implement, and that's the story of most large companies. It takes time to sort of implement the changes that your advisors are recommending. And I just sort of felt like the same recommendations were made year on year, and that's when someone sort of came to me and said, look, our company, our firm is starting the R&D tax team. Would you be interested? And for me, that felt like, oh, R&D, how does an accountant fit into all that? But really, what they needed was someone who could sort of understand accounting systems, of all these companies, and pull out the relevant costs from those systems to compile the claim. So that's how I got in. And it was amazing because, like I said, compared to external audit, where you're pushed into the basement, over here, you're out there, you're claiming money back for the companies, and you can see the difference the money is making to these businesses. And like I said, you get to speak to all the clever people in the country, and it was just amazing. So I've never looked back.
Fantastic. Do you want to tell us a little bit about your background before you got into accounting, your upbringing, the dynamics of your household, whether there were signs there of you getting into accounting even back then? Um, Speak to us. Tell us a little bit more.
Yeah, no, I am. I'm from Kenya. I was born and brought up there until I was almost 26 years old. Before I moved to the UK. So yeah, Kenyan by heart, African by heart, and it's an amazing upbringing. My mom was a teacher. She's retired now, and my dad was a prominent banker in Kenya. So come from a working family, and one thing I didn't want to do was do banking because my dad was always talking about banking, and I just wanted to be different. Um, but numbers was what I was really interested in, so I sort of went for the accountancy qualification. So part of it, I did it over there in Kenya, and I started working for Deloitte over there. Uh, and again, that was an amazing experience, because as a trainee you get to work with within different departments. So you're doing grant claims, you're doing internal audit, you're doing consultancy. And the internal audit was amazing because I got to sort of see other parts of East Africa, as we were sort of doing internal audit for the bank, which was spread out in different countries. So yeah, no, the accountancy has always been what I've wanted to do, and that that's how I've sort of come into this with Kenyan experience, and then moved to the UK later on.
Fantastic. You mentioned that you worked for Deloitte. What's your professional background like in terms of your qualification? Maybe some of the firms you've worked by, maybe even some of the lessons that you learned along the way with working with some of these larger firms.
So my because I qualified or started my qualification in Kenya, we had only the option of doing ACCA, which is Certified Accountancy, rather than the Chartered Accountancy. But they are sort of still almost at par in terms of accountancy qualifications. And I after the during the as I was doing my ACCA, I joined Deloitte, and like I said, it was amazing. The Deloitte in Kenya is much smaller and yet one of the top four firms. So I got the opportunity to work again for a vast range of businesses, some of the largest Kenyan businesses in Nairobi. And in Mombasa, it was different because dealing with all the shipping companies and container companies and cargos. And so it was the different geographies sort of presented different types of companies that I got to work with. And when I moved to the UK, again, having that background of large companies, I joined the St. Albans office in Deloitte. And their focus was more public sector than private sector. So I worked with, some of the largest NHS, bodies over here near London. So Chelsea and Westminster and, others, Northwick Park Hospital. And so, it's just been an exciting journey throughout Deloitte. The benefits of working with Deloitte is that it's such a vast firm that you get this wide exposure. But if you get tired, for example, when I was tired of external audits, you can move around within the firm. So I managed to sort of spend some time within corporation tax, almost a year over there before moving into R&D. So there are benefits of working for a large firm, but with a large firm, my client base was all the large companies, whereas my interest has been SMEs because they are more agile to change. So they can, whenever you recommend change, they are up for it and they can make those changes faster compared to large firms.
Fantastic. I was going to say, for any of our viewers who are new to R&D tax or even R&D tax credits, could you explain to them in layman language just what it is that is R&D tax? The reason I asked you this question, we work with quite a number of tech startups, and it's shocking and surprising how many people are not actually aware of R&D tax and the benefit it brings to their business.
So R&D tax credits are a government incentive. They basically, government wants recognizes that to undertake R&D, it requires a lot of investment into product development, process development, but also in terms of bringing on board different teams. So it is a risk-taking process, and they want the UK to be a R&D hub. So how do they sort of encourage companies to take these risks? Invest financially into R&D, and that's what the R&D tax incentives does. It is a form of a refund of the expenditure that you incur um, in taking this risk. So yeah, no, definitely it is, if to stay ahead of the market, to sort of build your own USP, you will be sort of looking to enhance your products or develop new products. And that's what the R&D incentive is. It's a refund on some of the costs that you will incur.
Fantastic. For those of us that are not aware, R&D tax is research and development, right? So Artie, what you just said just now, let's say I started up a tech startup.
Yeah.
And the first thing I did in the first year, I invested £100,000
Hmm.
to developers,
Yeah.
like £100,000 to developers. And that makes up, that makes up 40%, 50% of my overall income. So that year I turned over about £220,000.
Okay.
Well, £100,000, we well know labor cost is probably, is usually the largest cost to most startups. We now invest in two developers. How, because you said it's technically like a refund, how would you be able to assist me in a situation like that?
So the first thing is to understand, when you're doing development, it is, what kind of development is it? There is a specific definition of R&D for tax purposes. And it's really understanding how much of this development meets that criteria. So say within the two people that you've hired, you may have incurred 100K, but some of it is maybe recruitment costs, some of it is sort of setup costs. Or some of it is, costs in relation to what your two people or developers know how to do. So there are, within any aspect of a project, or within the 100K pool over here, there will be aspects that will be eligible and there will be aspects that will be ineligible. But say all the 100K is eligible, then you are able to claim an enhanced deduction. Now, this becomes a tax thing. Um, so you've spent 100K, the government gives you an extra 86% as a tax deduction on that cost. Um, so basically, it means that you're paying less tax on that 100 plus the additional 86. So you, from the 200K, you're removing 186K, and the balance is what you'll pay tax on. So compare that with what before the R&D you'd be paying tax on 200 minus 100, which is the 100. So the R&D tax credits or reliefs reduce the tax liability of a company. So it frees up that cash. Now, say you're a company who is, say you mentioned a turnover of 200K. Say your turnover is 50K or 20K because your product hasn't really gone to market properly. In that case, you're a loss-making business. So you have no tax to pay. But the R&D credit in such an instance can give you the credit in cash. Um, but there is a cap to that, but it is receivable in cash. So whether you're tax paying or loss making, the cash credit is still there for you to claim. It frees up the money for you.
Fantastic. Give me an example, a case study of a firm that you have helped out quite considerably when it relates to R&D tax. And if you could give us some details on how you actually impacted him and actually helped him with R&D tax.
So I'll talk about this SME business that we sort of, that it's really made the R&D tax incentives really sort of made a big impact on them. It was a software company. They were developing a new product, cloud-based product. And they had already released version 1 of this. The feedback that they were getting from this release was quite significant in the sense that they needed a lot of changes to be made to this version uh, to take it to market successfully. So the company, when we met them, had already started on working on version 2. They had put in a lot of money. The directors of the company had put in personal funding. One had also remortgaged his house because they needed to take this to market quite quickly. but they didn't have enough money to recruit more developers to bring this to sort of the level that they wanted. So when we met them, they were the directors were almost saying, look, if we don't get money in the next few months, we won't be able to take this to market. We will have to shut down, and all this will go to waste because we've put in as much as we can in terms of personal funding. We've applied for grants, we can't get any. So, I mean, when we spoke to them and we sort of made a claim for them, we made a claim for 2 years for them. I think we claimed around 40K per year. So you can imagine having money come in of 80K significantly helped this business. They were able to recruit the additional developers that they needed. And within 6 to 8 months, they actually launched their version 2. And from a company who was going to shut down because people had invested their personal funds into this to sort of being able to within 8 months bring it back to life, and making a dent in the market. It was amazing. That's the best example I've seen of how R&D tax credits has helped a small business.
Fantastic. Do you find a lot of companies plan around R&D tax? Does it take a huge part of their financial decision when it comes to their business around R&D tax?
It depends on what stage of claiming they are at. So some of them who are new claimants, they don't actually take it into account. It's suddenly a bonus for them. But those who have been claiming for a few years and have understood the financial impact that it can bring, they start planning it into the process, and that's the best way to do it, to sort of build R&D into your budgeting, into your reporting systems, into your management meetings to discuss, so it becomes part and parcel of your business strategy, R&D. And that's the way to do it, really, rather than just wish for a windfall of money coming in.
What are the stages of R&D tax? You mentioned the different stages of R&D tax, and maybe you can explain to us the differences between them as well.
Yeah, so what we find is, like I said, that there are new claimants who haven't realized that they can make a claim until somebody actually says, listen, what you're doing does qualify, and have you thought about making claims? So for them, they haven't sort of thought about it, and it's all a retrospective sort of exercise, thinking about the projects that they undertook, who was involved in them, what part of it was challenging. That's the R&D sort of discussion that you'd have to quantify and pull together the R&D claim. In contrast to that, there are those who will have sort of been through the process once and realized the financial benefits that it can bring, but they also want to build it into their business strategy. So one example, a really good example, is a manufacturing client of mine. When I met them, they had made claims through another advisor, but they were making claims only for new projects that they were undertaking, which were few because not everybody has money or risk-taking appetite to do something new completely. So when I met them, they were making claims, but really small claims. And through the review, we realized that actually the new projects was just a small part of it. What they were doing day to day is, that's where the bigger R&D was in terms of, production development, new processes, or refined ways of working. Um, and and when we made the claim, again, we made around 50K of a claim for this SME business. And the director saw this and said, oh my gosh, I I have plans to sort of take this to a different level. I want to diversify my business, and but it takes a lot of risk taking. It takes a lot of financial resources, and I might have to invest into the new machinery. But with this sort of knowing that they are able to, get some money back for doing all this, that completely changed their business strategy. They started sort of diversifying into new markets, developing new prototypes, and it was amazing because the way they went to market was by saying, look, I will develop this prototype for you at a nominal cost. We just maybe charge you for the material that we use in building this prototype. Otherwise, it's not going to cost you anything. But if successful, then you have to give us the contract, and we will, produce this for you. So, knowing that the R&D tax incentives were available to fund their prototype activities, they have now diversified into different markets overseas as well, into developing new products entirely. So they are no longer trying to sort of fight for a market share where everyone else is operating in that market. They are now able to sort of go into new markets, and that's helps their growth tremendously. So yeah, it's just building it into your strategy, business strategy, and educating your teams about it, so everyone is aware of what's happening. Everyone's excited about it. Everyone comes to meetings to discuss about it, and that's part of your business strategy, which will help you diversify.
What is the most common industry that you tend to work?
So over the 17 years, I've sort of worked across a wide range of industries, but my current client base is mainly with the tech businesses, manufacturers, and construction.
Fantastic. So I'm now going to ask you another question. Now, there are many misconceptions around R&D tax. One of them is that you cannot claim R&D tax for any other industry outside of tech and maybe manufacturing.
Mm.
What's your response to that myth? And are there any other myths around R&D tax that you would like to debunk?
Yeah, so it's not what people used to say. It's not for white lab coats or the completely new product development. It's or tech businesses. So we've made claims. Like I said, construction. Construction is an area whereby um, people feel like change is slow to sort of come about, because of the heavy regulation within the sector. So to make a sort of a R&D qualifying change is unlikely, and there won't be a claim to be made. But again, that's a myth. We've made recently we made a claim for a small for an SME business in construction, and they were planning to they were approached to build in a flood zone area, which nobody else wanted to touch. But because of the experience of the directors, they sort of were called in by the client, by their client, and shown the plans and said, "Look, we want to build here. Can you make this work?" Now that was where the R&D was, because how do you build in a in a flood zone where you're not, the environmental agency will not allow you to build over. So they had to come up with different ways of working. How do they sort of tackle the flood zone? How their construction will be sort of different to cater for the flooding? And there was a whole, a lot of work that they did, whole new designs that they came up with, whole new ways of releasing the flood waters, until the environmental agency actually had to give them permission to build. So that's an area within construction, as I said, someone would have thought that you can't make a claim outside the tech businesses, but construction, it's a perfect example whereby this company has claimed at least the first part of it, whereby they had a lot of thinking done and prototyping done to get the approval from the environmental agency. So there is construction. Anyone would think that oil and gas, for example, can you make a claim for oil and gas? But there's a lot of R&D happening within oil and gas extraction systems and purifying systems, and um, energy companies, water utility companies. There is a lot of sort of automation and software development, detection of where the leaks are. So there's been a lot of R&D in that. So it's not just tech companies, it's across a wide range of sectors.
Excellent. And I think, and I hope for some of our viewers out there that dispels some of the myth that we've heard about R&D tax. It's not just for tech startup. And so whatever industry you are, it's probably best you try to speak to an expert to find out whether you qualify. My next question to you is for those businesses that have never engaged R&D tax before. With your advice, what should be their first step into making a claim, into basically taking the next step on their R&D tax journey?
I would say come and speak to us. Be If you don't speak to us, you won't know whether you qualify or not. And the worst thing you can do is, make a wrong claim, because at the moment, HMRC are heavily scrutinizing R&D claims and imposing penalties. A few years ago, they would sort of not impose penalties for an incorrect claim, but now, heavy penalties are being sort of imposed because of the vast amount of incorrect claims to be made. So the main thing in making an R&D claim is understanding the R&D definition of what qualifies as R&D for tax. And there is a very specific definition. And unfortunately, that definition is so broad that it applies to all sectors. Um, and how it applies to your sector is where the expertise comes in. So call us, have the call with us. It's free. It helps me to understand whether you are able to claim quite early on in the process without investing too much time once we engage. And for the directors of the company, i.e. yourselves, it gives you some comfort to understand whether you are undertaking R&D eligible activities. The other thing is, if you don't engage properly in the process, you might pick very low hanging fruit and underclaim. So you want to sort of do this in a consistent manner to make sure that you're sort of claiming properly across the business and not only the easy sort of identifiable areas.
Excellent. Um, for those that are listening, we're going to leave Artie's details. If you're watching us on YouTube, it will be there in the description, and on Spotify and Apple as well. The details there will be there. Alternatively, feel free to reach out to us as well, and we can always redirect you. I was going to say, you've mentioned people making claims and making errors, and some of them leading to penalties. What's been the biggest errors, mistakes you've seen, or the most common mistakes you've seen from companies claiming R&D tax, especially companies trying to claim R&D tax themselves?
So I have seen significant amounts of underclaiming, and that's in my client portfolio, whereby uh, uh, talking about the manufacturing company that I was speaking about earlier, their advisors had sort of talked to them about R&D, that sort of realized that they hadn't found much, and they left the company with a spreadsheet to say, every year it's too small for us to get involved in. You claim yourselves. Um, and the company, despite following the spreadsheet, they got it wrong. Wrong in the sense that they weren't in making incorrect claims in terms of wrong claims, but they were significantly underclaiming. So whilst where they were claiming around 10K per year, after our review, we realized that, they hadn't looked at the entire business. And after that, we were consistently claiming around 40K for that business. So if you're doing it yourselves, unless you have that confidence that you are actually uh, you've understood the definition correctly, you've understood the way the claim should be compiled, the costs are quite nuanced. Can you claim capitalized costs? And there are all these sort of different treatments of costs for accounting purposes and for tax purposes. So there's a lot to take on. So if you're doing it yourselves, then as as long as you're sort of confident in the way you're approaching it, then that's fine. Uh, as SME business owners, I would say you've got so many other things to do, right? You're trying to run your business, you're trying to market, trying to recruit. Leave some of these, especially the tax aspects, to the experts. I mean, if I need an electrician, I won't change the bulb myself. I'll call in an electrician. So If you go to a GP, you'll get general advice. If you want specialist advice, go to a specialist. That's all I can say.
Excellent. And we seen some people as a business owners try to undertake the application themselves. You've highlighted just now some of the mistakes. What are some of the tips you'll give somebody if they're trying to claim it on themselves? Generally, this is just a question because we've had from some of our clients, um, and it's something you can do yourself. But however, something we don't necessarily recommend. It is a daunting task, and as you've heard Artie mention just now, uh, some people underclaim. They don't claim what really they could, and it shows probably best. Uh, I mean, the money you think you're saving, you're actually losing out on because you're not actually claiming what you should be claiming. Right? So, if you can let us know, Artie, just what are some of those tips that you can give those who are trying to complete it themselves, the process, and things like that?
So if you're trying to do it yourself, the first thing is make sure you understand the definition correctly and how it applies to your business activities. Um, that's the biggest part of it. So and there isn't much guidance out there. HMRC has recently released a lot of information on what they expect from claimants, in terms of make sure that your competent professionals are involved in the process. Make sure you've got enough documentation in place to support your claims, and they actually want it to be part of your business strategy. So when you're starting your a project, uh, maintain minutes of the meetings that you have to discuss the progress, to discuss the challenges. That's important information that you should keep within the business to support your R&D claims. But if you don't understand the definition, the problem is that the examples of those definitions are limited at the moment in the public domain. And that's where people make mistakes. So if you're doing it yourself, make sure you've understood clearly the definition of R&D and what costs you can claim, because otherwise you will make a mistake in claiming. Um, so those are the two things. Make sure the third thing is make sure that your competent professional, all the experts in your business, are involved in the decision making process in terms of what's R&D and what's not. Because that sort of links in with the definition, and then obviously make sure that you're correctly claiming the costs.
Excellent. What's been the biggest mistake you've seen? So somebody has come to you and they've come to you because they've attempted to do it themselves, or they've come to you and as a result have received fines or penalties from HMRC. And so upon them coming to you, what has been the biggest mistakes, maybe even the biggest fines you've actually experienced when working with clients?
So I had someone approach me recently. Or it was a sort of a care company and generally HMRC have now said that such companies cannot make claims. It's unlikely that they will sort of be doing any R&D. However, this company was an exception. They had made claims previously with other advisors and claimed for at least 3 or 4 years. Uh, retrospectively. So they had claimed those for those 4 years. They had received the cash, so they had almost received 160 to 200K in cash from HMRC, and suddenly they are sort of sent this letter saying we don't believe your claim qualifies, and it doesn't only impact this year, it impacts every year. So for that company to fork out 200K was a big thing. So it sort of uh, so when I engaged with them, it was sort of reviewing their claim processes, and of course, reworking through the claim. There was a claim to be made because they had developed a sort of a novel software to help their business. And it was sort of using AI and some prediction, machine learning type of activities. Um, but a lot of the other sort of parts of the claim had fallen out. So the it's taken months of going through discussions with HMRC and tribunals, and it's a lot of time investment when you've done the work and you're having to prove over and over again why why your claim is correct or incorrect, or you're sort of trying to defend your claim. So it takes a lot of time, a lot of money, in terms of the staff salaries who are involved in this process. So yeah, those are the kind of challenges that I've found, that companies have got part of it correct, part of it wrong, and then suddenly you're having to pay back all this money plus penalties. It's just not a pleasant experience at all.
I agree. I think one of the things I've noticed is with such payouts like this from government, you tend to find people, even companies, mismanaging it deliberately, trying to take advantage to benefit from cash payouts or in every way, any way, shape, or form. From your experience, have you identified major frauds, fraud attempts, and anything along those lines, based on R&D and from your experience as well? You may not have worked with them directly, I understand.
Yeah.
Um, but what are some of the things you've actually seen out there from people or companies trying to mismanage that process?
So I think it's yeah, it is a lot of the times it's less of the companies and more of the people who are claiming to be R&D tax advisors. So I've had lots of calls from accountants saying, I've got a recycling company who'd like to make a claim. And on the face of it, that sounds very exciting. But when you look into the business, that recycling really relates to, picking up, taking a skip to somebody's property, picking up the rubbish, taking it to the skip, to the dump field, the landfill sites or wherever, and that's their process of recycling, and that's not R&D. Someone else has said, I'm doing a lot of research into a book. I've been told I can claim R&D tax credits. No, you cannot claim R&D tax credits. It doesn't make the definition of R&D. The definition is really based on science or technology, and I can sort of do a separate session on that for you. But things like that, a supermarket sort of thinking that I've refurbished my shop floor in a completely new way. That's a lot of innovation that I've done. That's not R&D qualifying for the purposes of these tax incentives. So it's really important that you understand the definition. So those kind of companies I get so many calls, and unfortunately I have to say no, you're not eligible. There are some who are eligible, but they actually want to overclaim the directors of the company, who's say that we've used previous advisors and they've sort of claimed at least 90% of our R&D costs. It doesn't work like that, and on those occasions I've had to disengage with them, unfortunately, because it's not something that I would do. It's not in the spirit of the legislation. It's not, yeah, it's not what the scheme is there for. So, as I explained, the scheme has benefited tremendously for some business owners who were about to shut down, and then the funding sort of helped them, get back into market and become market leaders. There are some companies for whom this funding has helped them diversify, and they're doing really well. So that's the spirit of the R&D tax incentives. I really don't think anyone should sort of claim incorrectly, knowingly claim incorrectly, and use a reputable advisor. Make sure that whoever you're using is properly vetted, they're qualified, and they've got a history of making claims. It's not someone just new who's starting to get into this because to them, it's an easy source of income.
Excellent. How would they know? How would they vet? How would they know if somebody's qualified? What are the things they should look out for?
I would say, check what their background experience is, what their qualifications are. Are they sort of, have they been doing R&D claims for a long period of time? What their success rate is? You can tell by just looking at the LinkedIn profiles or the website. Companies who say R&D is such an easy process. You can do it within 2 days or within, you know, half an hour or 5 hours or whatever. It's not that easy. Within any R&D project, there will be R&D eligible activities and there'll be ineligible activities. And it's identifying the eligible activities fully and properly, and then the related costs. It does take time talking to the experts who are within the client company who are involved in these developments. It has to be done properly. It's not something that can be done within a snap of a finger, you see.
Yeah. Yeah. How do you see the R&D market industry evolving over the next couple of years? New legislations that might impact certain things. I know we had a conversation just before we went live today about some of the legislations that have impacted R&D tax. And what does that mean for startups or companies hoping to claim?
So, because of all this, fraud that has been or errors that have been taken place over the past few years in relation to R&D claims, and like I said, a lot of it is because the companies were incorrectly advised. Um, uh, the the thing is that you have to sort of approach this properly. And sorry, Samuel, what was the question again?
So in R&D, so we now spoke about the evolving future of R&D tax,
Yeah,
right? So legislation, what does the future look like? You've got legislations. What does
yeah.
it look like in a year's time, 5 years' time? And what are the companies that could potentially be impacted?
Yes, sorry about that. So, like I said, because of the level of incorrect claims, HMRC had or the government has over the past few years substantially reduced the amounts SMEs can claim. So previously, whereby they could claim an enhanced deduction of 130%, that was around 24-25% of additional tax benefit. It's gone down substantially to almost half, depending on on the level of the tax brackets that the companies are in. So if for the micro businesses or startups, this is a big impact because they sort of receive less cash, less reduction in their tax benefits. Um, so not only has the tax sort of benefit reduced, there are other changes that have come through. For example, I was speaking to Samuel earlier about overseas expenditure. So there are restrictions coming in, or they have started coming in, uh, for companies who are incurring R&D expenditure overseas. And whilst there are exceptions to those kind of activities, uh, mostly companies will not be able to claim. So, for example, I've got a few companies who are software developers. They've got a small team here in the UK, maybe 10 to 12 people, but a larger team of maybe 100 people overseas in jurisdictions whereby it's lower labor cost. And until now, we've been able to claim those overseas costs, but going forward, they won't be able to claim. So it's going to result in lower claims. There's a lot of sort of also changes in terms of uh, so we've talked about overseas expenditure, we've talked about reduction. So for startups, I think that's the main thing. On the positive side, whereby grant funding would impact claims, that rule is sort of now getting out, so it doesn't sort of impact claims for startups anymore. So there are positives, but a lot of sort of reductions in the claims, unfortunately.
Excellent. In the past, how would grant funding affect R&D R&D tax claim and credits? How would it be impacted?
So they were different types of grant funding. If you are notified states aid grant funding, the whole project would be disqualified from an SME claim. However, you could claim it under a separate claim, which is mainly for large companies, but so that was a lower sort of benefit level that you could claim rather than the higher SME claim. So that's for notified state aid. The non-notified state aid, you could actually split the expenditure between grant funding and own project funding. So it became quite complicated. First of all, understanding whether your grant funding is notified state aid and does it disqualify the whole project from the SME claim, meaning that even if you self-funded some of it, you still wouldn't be able to claim under the higher rates. You'd be able to claim under the lower rates. And that sort of became quite complicated for businesses. Some of them didn't understand whether they could claim at all because they'd already received funding. Some of them were not sure whether their grant funding was notified and they were claiming incorrectly. But the new legislation changes now sort of removes that rule. So whether you have received grant funding or not, everyone's on the same level field and you are able to claim those costs.
You mentioned we won't be able to claim for overseas costs. So if I have a startup here in the UK, something that's quite very common with some of our clients is that they have developers in other parts of the world. Each month they send them an invoice. Some parts of the world, maybe Ukraine, and countries in the East, for example. And one of the things these companies are doing is to take advantage of the lower labor costs.
Yes.
Right? Now, if I rack up a bill of £6,000 for labor in a particular month, is that not claimable at all under R&D tax?
So if it's relating the staff, UK staff going to say those overseas and jurisdictions and undertaking your R&D work for them, you can claim the staff costs. So it doesn't apply to your staff. However, as you say that a lot of companies will have their UK sort of entities and then they'll have their overseas entities. So staff from those overseas entities, you won't be able to claim unless you meet certain exceptions. So those exceptions are really not relating to the cost or availability of workers. They relate mainly to whether those conditions are not in the UK. So if you say that, I am developing a product, I've seen this mainly in the sort of health sort of tech businesses or where they're sort of developing a new, say, seed, new DNA for a new seed that the company is developing. They find that, to undertake those tests, they haven't got the correct climatic conditions here in the UK, and as a result of which they're having to sort of do the R&D overseas. In those kind of circumstances, you can claim for the overseas costs. But generally, whereby you've got, say, software developers working overseas, in most cases, you won't be able to claim those costs anymore unless they're your UK staff.
Fantastic. I said to you beforehand, what are some of the misconceptions around R&D tax? Now, for startup, what are the most common things that starters think they can claim, but in actual fact, they cannot claim, and vice versa? What haven't they claimed that they weren't even aware of that they could claim? So this is specifically to startups.
Yeah.
Startup. What are the most common things they were claiming that they suddenly realized they could not claim, and vice versa, the things they didn't claim that they actually had entitlement to?
So in terms of what certain sort of startups feel like, they've made patent applications of the fees of patent lawyers, understanding the regulatory requirements in the UK to sort of develop their IP. Uh, those initial sort of uh, commercial, they're termed as regulatory commercial activities, lawyer fees, um, business startup fees. Those are non-qualifying. And so a client of mine who is a startup is, they feel they've spent 400K on R&D costs. And when we actually look at them, it's a whole lot of understanding the environment in the UK, understanding the regulations. What can they develop? What other conditions do they need to meet for their product to be successful? How will they patent this? Those kind of fees, those kind of costs you cannot claim. So yeah, it's worth understanding that from your 400K pot, your R&D pot might be a small part of it. Um, on the other hand, I find that many startups, the founders have invested so much time into the business, they're not paying themselves. And the R&D, if you remember what I said, is the R&D tax relief is like a refund of costs. So if you don't pay yourself because you want to save money and spend it on uh, other things that you need your startup to take off on. If you don't pay yourself, then you can't claim that money back. So, you know, I find like, people, startups, some of them have developed such great products, but they've developed it within their team of founders who've been sort of working hundreds of hours into the product, but they haven't paid themselves, so they can't claim. So as a startup, make sure, as a founder who's heavily involved in R&D, do pay yourself, a salary from the company. Um, and for the others, there is that misconception that, out of a big pot of R&D funding, you'll be able to claim everything. Not everything is claimable.
Fantastic. If a founder cannot afford to pay themselves, so they pay themselves a very minimal wage, but doesn't reflect their role in the company, is there a way they can claim on their uh, higher earnings as opposed to the lesser one they're claiming? Does that make sense? So if you're saying the CEO of a company maybe it's on 50K,
Yeah.
but they can't afford to pay themselves 50K, so they're paying themselves around 15K. Is there a way they can claim in line with that 50,000, even though they're not paying themselves directly, but their role suggests they are actually entitled to that 50?
No, no, you can't. So if you think about this claim as a refund of the costs you've incurred, so you have to have spent that money. Uh, so whether it's 15K or 50K, you have to have spent that money. Uh, that's only when you get the refund, and it has to go through your tax computation. So if the difference between the 50 and 15, if you've not actually paid it or incurred it, and it hasn't gone through your tax computation as a deductible cost, then you can't claim for it. The other sort of things I see within startups is and scale ups is, whereby, you think that I'm going to pay myself 15K, and then if the business does make money, I'll take it as dividends. For R&D tax purposes, dividends are non-qualifying. So whilst you may have made up for the 50K through a combination of salaries and dividends cannot be claimed for R&D tax reliefs. It's only the salary. So I would say, Samuel, they should actually speak to you guys in terms of their accountants to sort of understand, the tax implications of taking a salary versus dividends, and then the R&D angle to it, and what's the most beneficial balance of remuneration.
Fantastic. If we have a company, a business owner that's considering R&D tax, what would be your message to that individual?
I would say, please come and speak to us. It's free. Come and learn about R&D tax and how it impacts your business. It's just half an hour of your time, and you get a wealth of knowledge, and at least the assurance that you're doing it correctly. So whether then you do it in house or you do it with us, it's your choice entirely. But do it correctly is all I'm saying, and speak to us. It's free. It's free.
Fantastic. You gave an illustration this, but I want to um, push on a little bit, and I'm trying to say this from. I want you to explain it to someone that does not have no knowledge of R&D tax, right? So they've turned over 50,000, they've turned over 100,000,
Mm.
and they're making a claim for 50,000,
Yeah.
right? How? would they receive a refund? How does it entirely work? So we know that generally, as a business, if you've made 100,000 but you've expensed 50,000, means you've made a profit on of 50,000,
Yeah.
and your tax will be there about 20%, which is 20% on your profits. It's how a limited company is usually taxed here in the UK,
Yeah.
right? So you pay that, and then what's left in your company is £40,000 after taxes, right?
Yeah.
Now, with the interdiction of R&D tax, how does that change?
It's, um, it's a bit difficult to explain it just like this. So say your whole 50,000 is R&D eligible cost.
Yeah.
And there are certain cost categories that only certain cost categories that you can claim. But say we're saying that whole 50,000 is 100% R&D and we can claim that cost. You get an additional 86% deduction on that 50. So your cost suddenly becomes, I need my calculator for this.
Mhm.
So 50,000 times 0.86. So suddenly you're getting, okay, so that's correct. So you've got 100,000 turnover, you've got 50,000 of cost. If that whole 50,000 is R&D eligible, you get an additional 86% deduction on that. So your new cost becomes 50 plus 43. So your profit goes down. So say plus 50,000. So your profit now goes down from 50,000 to 7,000, and you're paying tax only on the 7,000 rather than the 50,000.
Fantastic. So,
So
guys,
it's
I hope that makes sense. That is a very thorough breakdown of those taxes and how it will work in your business, right? And as well, you've also mentioned that somebody now may be thinking, oh, because of R&D, I mean, because of the developers we paid and innovation that we're doing in the business, we didn't even make a profit. In fact, we made a loss. How can they also benefit? Because we both know that even after making a loss, you can actually still benefit.
Yeah, so but what happens is then there is a complex calculation in all that. But basically, the simplest way to think about it is that the 50K that you've spent plus the 43K that you've got as a result of making the R&D claim, you are taking that 93K and giving it to HMRC and saying, here, please take our R&D expenditure and give us money back for it. And the money back that you get is 10%. So it's not a big amount. Previously, it was much, much higher, but now you sort of get 10% of that 93,000 back in cash. So you do get some cash back, but it's much reduced compared to previous years. Um,
Fantastic. Excellent. Really appreciate that. And I really appreciate your time this morning that you've
Not at all.
if you had a final message to say to any startup business owner, what would that final message be?
I would say, if you are sort of, if you think you're, eligible to make a claim, come and speak to us. We'll explain the whole scheme to you. We'll explain how it applies to your business activities. Some people who come to us, they don't qualify, and then at least they know that they don't qualify. And some who do qualify, then it's good for them to know which costs actually. So we spoke about the 400K, not the whole 400K. In my previous example, will qualify. So as a startup, it's good to understand how much will qualify, and you build that into your sort of budgeting process. And at least you know that you'll get that money back, and you can take more risks. You can sort of think about further innovation. You can think about expansion of your business. There are so many sort of wider impacts of claiming on R&D tax reliefs. It's a financial benefit, definitely, but it helps further innovation within the business. So come and speak to us, and we'll sort of dispel all the myths that you may have. and guide you correctly to make your claim.
Fantastic, Artie. Artie, you've been a fantastic, fantastic guest today. I want to appreciate you for your time today
Oh, that's all right.
and for your wealth of knowledge on R&D. For all of the business owners out there, please ensure you reach out to us, reach out to Artie if you have any questions regarding R&D taxes. Also, if you're in our newsletter, please join our newsletter. There will be some information that will be communicated on our newsletter. So I'm going to put a link below for anybody that wants to join our newsletter so that you can have access to some of the information, free information that we're going to be sending out there. Fantastic. Once more, Artie, thank you once more for your time.
My
And for the
pleasure.
rest of us, we look forward to seeing you in our next episode. We know we do these episodes on a weekly basis. For the time being, make sure you share, like, and subscribe to our channel. We really appreciate you, and we look forward to seeing you all next time. You take care. See you soon.
Take care, everyone.